I think a good starting point is to ask, well, 250,000, what does that look like relative to prior years, prior periods of recession, prior periods of economic pain?
Well, the number is very high, even compared to last year when we first started seeing a wave of tech layoffs. 2023 is the highest number that we've seen to date. So 250,000 tech employees have been laid off so far this year. That's up from 165,000 in 2022. And even in 2020, when we saw a wave of pandemic-related tech layoffs, that number was only about 80,000. So this year has been the worst time in the past few years.
What, if anything, do the companies that have done layoffs and cuts got in common, be it their reasons for doing so or their reaction to something?
Well, the biggest reason for these tech layoffs has been a correction of the overhiring that they did during the pandemic surge. Back in 2020 to 2021, we were in a very low interest rate environment. Tech companies were booming in demand from people staying at home and turning to tech services more and more. And so these companies were able to go on a hiring spree, and they invested aggressively in initiatives that were speculative or wouldn't pay off for several years. Now, of course, the climate is entirely different. We're in a period of interest rate hikes. And so that's causing these same companies to now cut back and correct for that overhiring from before.
OK, so now we're in talk of cuts. So does 2024 mean we rectify that, we see more exuberance, more hiring, or is it actually slower and more specific, like, yes, we'll hire, but only in AI?
Yeah, well, after seeing actually some declines in layoffs over the course of this year, the past 2 months have marked an uptick in the tech layoffs. And I do expect that to carry over to early next year, because the year end is a natural time to conduct a layoff as it coincides with annual budgeting. So as companies in tech are taking stock of their full year performance and are looking ahead to 2024, they're finding that job cuts are necessary to improve profitability. So I do expect it to remain slow for the next few months. Although, as we look ahead to the rest of 2024, hopefully, if interest rates do come down as is expected, that would mean that the tech layoffs will finally subside.
Roger, it's interesting, isn't it, that much of the so-called silver lining, when everyone was really talking about the big cuts that were being executed at the beginning of the year, everyone was like, well, more startups will be formed, more people will leave, they've got some cash in the bank, they'll be able to start up some other companies. Now it feels also that we're talking of, well, technology being necessary everywhere, particularly in this field of AI, and people going into banking sectors, going into different industry groups that need that sort of technology. Retail, I mean, there is an industry that it doesn't affect. Are people leaving tech more broadly?
Yeah, the rate of startup formation is affected because fundraising is still hard to come by. We're in an era now where the cost of capital is much higher than in years past. And so startups are finding it harder to raise money compared to before. And that does make it harder for these laid off tech employees to stay in tech or to go start their own company. And so you are finding that more and more folks are going to other industries. Either, folks on the business side, like salespeople, recruiters, are leaving tech entirely because they can find better roles in other industries. Since the tech downturn has not broadly affected what's going on in the rest of the economy, where unemployment is still very, very favorable. And then even engineers are also looking at other options too outside of tech because of the reasons you said. Tech is everywhere, and every industry now has a need to invest in technology.